markets, everyone. Thanks for joining us today on this 30th of July. Tomorrow will be the last day of July, the last trading day as well. Today we have some interesting things to look at regarding the dollar, so hang on for that. But before we start, as always, we're going to take a look at this PowerPoint. Today's focus is a strategy webinar, so we'll be focusing on strategy side of things, not so much, well, I mean, we can take a look at analysis, but the primary focus is strategy and the rules and guidelines connected to strategy, whereas Tuesday, Thursday, we kind of make a mix to make an analysis. And of course, I then take a look if there are some trades that I like. The disclaimer, online material here is developed by Admiral Markets Estonia for a global audience. Please take into account that the information in this session may not be suitable for everyone. To get the corresponding information on charting conditions and any other detail, please visit admiralmarketsglobal.com, select your country of residence, and then contact the appropriate entity to check if this webinar is indeed something that is suitable for you. All right, trading for exchange and global financial markets is also considered high risk, and it may not be suitable for all investors. Please seek the advice of an independent financial advisor for more information on that. And this webinar is for educational and informational purposes only. By continuing watching this webinar, you agree with the disclaimer mentioned here and on the admiralmarketsglobal.com website. And as always, we thank you for your attention. So today's strategy is going to be taking a look at 4 different things, if we have time for that: moving averages, breakouts, candlesticks and price action, Fibonacci, and maybe if we have time, Tenkin, parabolic. That's a very mechanical strategy, so it's not so interesting to look at if it's very, very non-discretionary. It's a bit more interesting maybe to look at discretionary strategies. We'll be using this model to identify if it's an interesting setup at the moment within the market's environment that we see. We'll be using the steps, trend, opportunity, filters, trigger, and entry method. All right, so before we actually dive into that, let's take a look at the calendar. One second, folks. There seems to be my browser seems to be slowing down here. There it is. So we have, or we had, no, we will have Spanish GDP. That's not considered a high or medium. It's a light. More importantly, though, as you probably know, we have ADP, non-farm employment change, but also FOMC statements. So those are 2 big things for the dollar, plus USD GDP, and a whole other list of dollar news coming up. So those are big things for the dollar, especially then if you consider also the fact, which is quite unusual, to have both events in 1 week. We have not only FOMC but also NFP on Friday, and that's not so usual to have them together. So we'll actually prefer to have them together in 1 week because that leaves, there's more trading with less news events, so that's always good. I would rather see them in one shot together than spread apart. So this is good stuff. It'll also be very interesting to see what happens with the dollar, because obviously these 2 events have a very big impact on the reserve currency of the world, the dollar, the US dollar, and the unemployment rate and the NFP will have a big effect on what we will see on the dollar. So I wanted to suggest, before we dive into the strategy webinar, to take a quick look at this dollar index. This is a weekly chart. So take a look first at what you see here. So you can see resistance, of course. You see the red lines there at the top, and the magenta line indicating the floor here, the bottom, the support at 79-ish. So obviously price has been bouncing back and forth there for about a year on the dollar index at least. And it has also been there before, right? As we can see here, we had two bottoms. So obviously we're in a consolidation mode on this dollar, especially if you then zoom out to the monthly. You can see this is looking like a contracting triangle. So we've been in a very big consolidation. Of course, the dollar index very much so looking like the euro dollar, isn't it? That isn't coincidence, obviously, because the euro dollar has a big part in that dollar index. So that's not so untypical, unusual, obviously, with a lot of volatility here, but slowing down as we get into 2012, and then price really went sideways, right? So recently we had, a couple of months ago, we had a bounce again off that support level, just like we had the previous 4 times. Now the question is, can we really push through the resistance? That is the main question, and the dollar news will probably answer that question. Because, you know, sometimes technical traders, I'm a technical trader too, but sometimes they say, you know, fundamentals follow the technicals. Well, I can agree with that to a certain degree, but in this case, technicals can go both ways. It can go down, and it could respect the resistance, or price could break out, and it could be a breakout. So in this regard, I think it's really up to the news to say which way this price will go. Is it going to respect that resistance level, and is it going to get a rejection and see retracement back maybe to the bottom, and we will continue with this, let's say, messy, muddy consolidation? Or are we going to get a dazzling breakout to the upside as price pushes through the resistance? That is, in my opinion, the main question, and I think that will be answered in the news events. Maybe not necessarily today, because I think that still the NFP weighs in heavier than the ADP, obviously, and also the FMOC, unless something really is revealed that surprises the market. Now, if we zoom in to most recent price action, we see here bullish pin bar, and we see, you know, this is more like a retracement for upside like that. So in that regard, we did get a follow through with higher highs and higher lows. 1, 2, 3, 4 weeks in a row. This is looking like week number 5, but obviously this week is only halfway. So this is looking like, and we broke the top, so it does look like a continuation of a zigzag at least, or maybe even a trending mode. So to me, it looks like a dollar strength coming in, but obviously we still have these tops in play that could be a big headache, and with the news events, it could turn at a dime for retracement. Alrighty, so let's take this dollar index kind of ideas and translate them to our currency pairs for the moment. Maybe not all of them, maybe the euro dollar and pound, for instance, and then we'll dive into strategy. So the euro dollar, obviously, we know it has been falling and has been copying the dollar index strength. And the euro dollar has been falling now, fell below the 134.25 as we were indicated yesterday. Look out for a break. No, I wanted to actually press to retrace higher, sorry. So it didn't get there, but the pound dollar did break. The breakdown was anyhow very marginal at best. I said below 135.25. No, I wanted to, now I remember, I want to price to go higher or to break below 134.25, right? So we did get a break, but the thing is that the price really didn't move too far. It just went up to, down to 134. So that's the thing maybe with July trading and also the news events this week is just price doesn't have a lot of juice in it. It doesn't squeeze out a lot of pips really, but it did make the breakout. Today though, with that break of 134.25, we are getting closer and closer to the first target, and you can see that dollar strength against this euro. So if we get a bounce at the -272 target, for instance, and we see price back in this zone, we can see the consolidation that would happen if the dollar index gets rejected. If the dollar index breaks, then we could see this, of course, fly down to 132, 130. So that remains the question on this euro dollar. That will be the translation of the dollar index. Pound dollar will be the same stuff, of course. Pound dollar has the same situation where it's breaking support. So it too, if the dollar index breaks to the upside, we'll see follow through down to 167 potentially. If it doesn't, we might see some retracement. We'll need to, let's take a look. This has fallen already a pretty sturdy 270 pips or something like that. Let me take a look. Looks like 260, 250. So that's a crucial moment. If we bounce here, we could easily see a retracement, probably up to one of these fibs, or maybe even here. If we do break below, we obviously have a good space to fall down to this target. So that's what, you know, the dollar strength or weakness would translate, I think, onto the pound dollar. Alrighty. Well, anyone have a preference to start with one of the strategies? Would you rather look at price action at pivot points? Would you rather look at moving averages, or would you rather start with Fibonacci? Okay, so I got 3 answers. It's a bit of a mix. All of them moving average of Fibs. So we hopefully can go through all of them. I'm not sure if we'll make it time-wise, but we have to start with one of them. And Bob says MAs and Graham says Fibs. So it's a tie. With ties, I guess the first answer comes first. So we'll start with the moving average, if you don't mind, Graham, but then we'll go to Fibs. Let me just change the template here based on that answer. 1 second. It's going to be very interesting with this dollar. It'll be also interesting to see the GDP numbers today on the dollar. That could be also a very interesting and valuable number. Obviously, the GDP figures indicating what kind of growth the economy has. We've seen a mixture of US GDP figures. So I'm very curious what this one will say, to see which ones are maybe lining up for, which ones are more likable or more probable, sorry, the more bullish numbers or the more bearish numbers. Obviously, good GDP numbers could translate into that dollar strength. Oh, that's the wrong one here. Alrighty, so what we got on this chart are 34 EMA bands as high, low, and close. We have, I'll make this, it's a 136, but I actually nowadays prefer 89. Although it's pretty close to the 34 then. I guess 34 or 136 or 21 and 89 are good combinations. Let's stick to 136 for the moment. And we got a 544 for the very long term. So, it's if you're trading moving averages like this, for instance, it's good to to wait for traces within a trend like that. So for instance, these spots in here are opportunities. This one I would be a bit cautious of, although it was a good breakout yesterday. It is riskier because we already have single divergence, but it's okay still. It's still okay. It's double divergence as we have now. That would be a moment that I would definitely be cautious of. So this could still fall further on the euro dollar, but from a moving average point of view, it's nice to wait for the retracements. And if we get one of those, we'll have the divergence, double divergence in place. So this is one that I would say is on hold from a moving average point of view, unless price makes a retracement back to at least the 136. Yeah, the Aussie had a small fall yesterday. But was quite consolidating. This is where the moving averages are quite overlapping, but from a Fib point of view, by the way, I would see more merit in that, where price could go to that minus 272 target here. But on a 50-minute world, it would probably look like a good breakout. Let's take a look. Yeah. From a 1-hour point of view, if we take away the 544, which is anyhow more of a very, very long-term one, everything is aligned, 136, 34. So we got a bullish breakout indeed. Let me just quickly write the numbers here for Graham. But I like 21 and 89, 21 and 89 also. Or if you want to look at a volatility kind of difference, you can use 21 plus 34. Alrighty, so back to the 15. Let me quickly put on, for intraday trading, let me add the Camarilla now, because I'm curious about the intraday levels here. Alrighty. I have these short terms. I want to get rid of these. Let me just quickly do this. Sorry about that. I wanted to make it a bit more visible for you. Okay, let's leave it like that. I'll just quickly save a new one because I don't want to overcrowd it either. So let me quickly remove things so that it doesn't get too crowded. Okay, good. Yeah, this is a breakout. We're going below L3. So this breakout right in here was a good candle, breakout candle right here. That was a good breakout of the consolidation with a good candle close near the low. So if anyone missed that one, which probably, I guess, some have, then it could be good to wait for maybe retracement. Let's see, the hour just started, in fact. It's already fell a lot of pips within 4 minutes. Yeah, in this case, I would still rather wait for retracement because let's take a look at the 5-minute here. We're at the L3, so that usually is about a bouncing spot. We're also at the monthly pivot point. although we did respect that already earlier. We're at the daily S1, so a bit of a bounce back to 93.76 could happen, although we are getting a lot of impulse here. I don't like jumping in trades like this personally right here without getting a break. So either the break of the fractal or the candle close is the moment that I would like to jump in. So I would rather wait for the retracement still to that level, like 93.74. Let's take a look. Yeah, rather wait for retracement back to this breakout level. This is where the 5-minute break happened, or the 50-minute candle breakout candle was closed. So I rather wait for a retracement back to that level where I would have entered originally. I don't like to jump in much later than I really would normally. So that's a good breakout at the moment on the AUD/USD. Pound 2, although it's getting a bit more choppier than the AUD/USD, but it has a similar breakout. Let's take a look. This is actually breaking right now. This is the fractal here at 96.39. So we're actually breaking that level right now. Now, personally, I like the AUD/USD more for retracement. Let's see, it's not retracing as yet, but then the pound. I'm always a bit leery about pound breakouts early in the day. So I'd rather wait for an hour or two before taking pound breakouts. But that's something that might not be necessarily as valid as it was in the past, but I would have to check that again. But this is my standard rule of thumb, basically, with the pound dollar, because the pound likes to spike up and down the first 1 hour or two. The euro dollar hasn't really broken, but if it does push below 134, we could see a breakout for the downside, and the target would be 133.70-ish. The euro dollar probably better than the pound in this earlier hour, I would say. But so those are all breakouts indeed. Aussie, I would rather still wait for retracement instead of chasing it here, but the euro looks like a breakout is soon close by indeed. I would prefer a stop loss. Let's take a look at the hourly at about 134.17 probably, or 23 maybe even. Although that's getting a bit big. 23. Let me take a look. 23. Still okay. Yeah, 23. It's just above the daily pivot point, so that would help. It's also above the H3. If we go at 17, we're just actually right below those levels, which would, of course, not incorporate the extra shield it could get by going just a bit higher, obviously, to incorporate not only the H3 daily, but also this bottom, which is all three levels are coming in at 134.20. For those that were looking for a pound dollar yesterday downside, that was a good breakout right here. That was a good breakout candle. Or if you waited for the break of fractals in the bottom here, one could have taken this break right there, and you got this downside. Not a lot, but you have to, I mean, as I said, in this type of environment, each pip is worth probably more than outside of the summer. So you're not going to get a lot of follow through, and there wasn't a lot of follow through. 20 to 35-ish pips, not a lot, depending on where you exactly entered and exited. But this was the day, the move of the day. Let me say it this way, right? And prior to that, we just had some consolidation. And well, we didn't get up to the level I wanted to short it, but eventually, if it doesn't go up enough, then the breakout is the only choice. Dollar CAD is looking more bullish than I expected. With this breakout, I really didn't have much interest because of resistance close by, but it's keeping its head up. It's really not showing any weakness at the moment. And if you look at yesterday's candle, again, a strong daily candle. So I would skip any, I would try to exit any shorts. If anyone took this shooting star and you see price lingering sideways like this, then I would use these fractals to move the stop loss just above it. Right, because this is showing more steam. So no, dollar CAD is not showing that resistance as yet. Dollar Swiss C is also continuing with its strength. The dollar strength here very highly vulnerable though to the news events we are going to have soon. Dollar yen is also moving up. Pound yen and euro yen are remaining stuck in that consolidation. In fact, doesn't look too interesting. Pound odd and euro odd are also stuck in consolidation. Why is that? Because look at prices just going sideways at the moving averages. If anything though, maybe the euro odd and pound odd are better equipped for downside because all the moving averages are aligned for downside. It's just that the 34 is flat on both of them, the euro odd and pound odd. But if the euro odd or pound odd were to break, I would say below the moving averages, we could see a break, pull back, and go. Let's take a look at the 4-hour charts quickly to see which of the two is better. If you look at the moving averages, which of the two, if this is euro odd, we have 136 and the 34 band like this, price kind of fighting against the 34 band. And if you compare that scenario with the pound odd, and the 544 is way up here. If you compare that with the pound odd, where the 89 is not below the 544, then we can see that the euro odd probably at the moment has a slight edge if you look at these moving averages at least. So if price were to break below, that would look a bit better for a 1-hour breakout. But it's not moving down as yet. Let's see. We do have, if we mix in maybe the price action at pivot point strategy to the mix, and we add that, you can see a shooting star right here at the weekly pivot point. That could maybe be something to investigate. If you don't like 50-minute, you might want to wait for this hourly to form. I'm not that sure at this moment, if I'm really a fan of that 1-hour rejection at the weekly pivot point. Why? Because I already see 2 touches here and no follow through. I would probably rather wait. I would rather wait for this 4-hour candle to finish. Even on the 4-hour, if you look at the 21 EMAs, they're pretty flat. So I would skip that for the moment and rather see how this 4-hour candle closes. If you took this engulfing, bearish engulfing at the weekly pivot point, let's assume someone took that trade. 1, 2, 3, 4, this is the 5th candle. So the 5th one is pretty important. If we see something like bullish like this, you might even see actually a retracement trade occurring like this. It's a bit of a vulnerable spot at the moment. So instead of taking anything in this mess, I would rather wait for the breakout. So this candle is going to be pretty important. Yesterday's bullish candle was Harami. That would lead to the potential of this happening indeed. You know, on the daily, price is away from the 21 band, and you know what happens sometimes? If you are away from it, you kind of get this hook back to it. That could happen here. How do we know we get the hook back to the 21 band on the daily? When it breaks above this trend line. Basically, it's a contracting triangle. So this upside is the reversal. Outside of the triangle, this is a continuation of the trend below the triangle. The upside, though, is more difficult, more dangerous in a way because of the fact that the target is less sure. This could fly up, but this could also just move up a bit and hit the monthly S1 and then move down again, go back into that consolidation. That's always the risk. All right, so the Urod Breakout only, I would say. Let's see, that I think covers them all because the Euro Yen, Pound Yen are not interesting at the moment. The Dollar Yen is moving up. Let's take a look at the 15. Kind of had a smaller breakout trade here maybe, but let's see. If that breakout trade was missed, maybe, anyhow, I don't know, it's very close to resistance still here. Let's see, if I use Fibs for just a moment, I don't think there's a ton of space. So the Yens don't look that interesting. The dollar looks the most interesting at the moment. And I like the dollar against the Euro and Aussie probably the most, although the pound eventually could be interesting too. That's about it. I guess the Euro could be good too. Otherwise, nothing new under the sun at the moment. Looks like we're getting a bit of a pullback here on the Aussie. Close to retracement back to that zone maybe. Let's see, 93, probably 93.72 is more, yeah, 93.72 indeed. It's probably what we could expect out of it, 93.73. Wouldn't probably expect much more at the moment, but you never know. Let me take a few lines off here. Just an example of how you can use the hourly chart for a swing trade idea. For instance, if you see the moving averages, prices below the moving averages here, you get the downtrend when the 21 goes below the 89 here, for instance. Price retraces, but then breaks below it again. So this is, for instance, more of a swing trade idea. When you take a short in here, with this candle close, for instance, that could be a trade idea. Now, some of you might take that off if you follow my candle rule idea, 3, 4, 5, 6, 7, 8. So that was not looking good time factor-wise, but that could happen sometimes, especially throughout Asian session. So that depends how aggressively you use that rule. Actually, this was half Asia, half European session. Well, anyhow, swing trades sometimes, though, it could be worth having a bit more patience if you have the entire week ahead of you. This was, of course, Tuesday. Yeah, so if you like a particular trade, sometimes you can have a bit more patience. It's just to protect oneself against the fact that a breakout doesn't occur. Another solution would be to move the stop loss above this fractal instead of taking the trade off at a particular time. That would be a way of reducing the risk by about half, more than half, excuse me. And then you would still be in this swing trade downwards. Let's see if pound dollar had a similar pause as well. So if one takes this breakout trade, we had 1, 2, 3, 4, 5, no, 6, right? That was also close, but the 5th was a shooting star. It also was getting close into that that decision-making zone, but the difference is that the pound the pound had a shooting star and engulfing. If one didn't take this candle, where I have the red dot, then the blue dot later yesterday in the close to New York session, I think 12, yeah, not actually, just in between, was another moment, of course, when it broke below the 21. Now, how can you avoid breakout trades that aren't going anywhere is also the AO, right? Because if you see price move back to the moving averages and you see the breakout candle like this, you might want to be careful if the AO has been extendedly below the zero line. Those are therefore a bit more shakier. When you take a short like that, you see it didn't really go anywhere. So you can, one could still attempt it maybe, but the 25th was a Friday. That is another reason maybe to be cautious. Plus, if you see 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14 candles like that, which is well past the 8th that I have in mind, then 5 to 8, then taking just off a break even would probably be the best, or moving it just above this fractal. Great. Adrian is in that level. Perfect. The Kiwi. Bob is asking about the Kiwi, and then we'll take a look at the odd Swissy. Kiwi is still a bit. This breakout trade was not possible due to the Kiwi interest rate. We did have similar breakouts here, though. Here and even this one, but this one really didn't go anywhere after that. Sometimes, it's a bit unlucky how a breakout candle could be as big as this. And that's why sometimes taking an entry order below this bottom, in this case, would be better than waiting for the candle. So that's the balance that one has to take. Anyhow, let's see, Kiwi has a single divergence here. Well, this is certainly also bearish. Yesterday was a very bearish candle. The only thing what I'm a bit worried about is the potential for retrace I would say anywhere, if it stays below 85.55 here, it's all still bearish territory. So any move up that does go back to about 85.36 here on the Kiwi would probably be interesting shorting territory, where we have a H4 and an R1 here plus these bottoms. Doesn't even have to get up that high necessarily, but if it does, we're still in bearish territory. If we don't get that high, then let's see. On a 50-minute chart, we could also be in breakout area right here. We would need a candle close below the band and below the trend line, and we would have the same potential breakout as the Aussie, with targets. Well, any of these, probably the L5, the AS2 here would be logical levels. The only thing that I don't like about this is we are at and this is something we of course have to be aware of. I wanted to point out is that we are pretty close to this 85 level. That makes maybe a bit less desirable. Any chance of 86.40, 86.30? Well, if it gets there, then it is a big retrace. It's a 4-hour retracement, all the way up to the middle, to the pivot point and these bottoms. It could, but that would have to really, that would engulf all of these bearish candles. So anything of a bullishness, might be, anything of a bearishness might be gone by that time. We could still be retracing back to the 89 EMA. That could still be a resistance spot, but yeah, the structure is totally different. So that level today, it could happen, especially with news events coming up, but I'm not sure if it's worth planning for that area. So with the Kiwi, maybe the pullback is better, as Bob says, indeed, because of that level. Let's take a look at the odd Swiss. Yeah, the odd Swiss is really getting in is a bit slowish. It's just not breaking. Taking a long time here. Yeah, so this is one of those areas where one wants to be maybe a bit cautious of the fact that it's just not moving anywhere. And if you then use the time rules, then one would have exited already, probably, because this was one of the breakout candles, and you got 1, 2, 3, 4, 5, 6, 7, 8. That's 8. Then we got 9, 10, 12, 15. No. So unfortunately, not breaking out. From a 4-hour perspective, could be a bit different. we actually see this is the fifth candle. So from a 4-hour perspective, there could be maybe still a bit of time on our side. Obviously, this top would be nice to break for that follow through. One thing is good though is that the AO is very strong on the 4-hour chart, and we are back to zero line, which means that a break above this top, when we do break up the top, is a 4-hour AO setup because all the moving averages are aligned. So maybe you want to hang in there a bit longer than the usual 1-hour level, because as soon as we break through this top, we have about 80% chance to hit 1-to-1, which means to go back, about 80% to go to this top. And then, of course, still follow through is also possible. Yeah, 4 hours. So 4-hour looks good, in fact. No divergence indeed. Strong AO. So that, those are factors that maybe say, okay, let's give it a bit more time. But this is the fifth 4-hour candle, so that might be the last one you want to give it. Alrighty, so that is it regarding the moving averages. The candlestick patterns, let's take a look at that. Oh no, Fibonacci. Well, let me just do the candlestick patterns otherwise. Does anyone have a candlestick pattern they would like to look at or saw this week that was interesting? Kalian is planning to enter 85 with 84, 88 stop loss. Yeah, it's a counter trend reversal trade. It has a small risk. So if your target is good, even if it fails, it rewards the risk there. Kiwi is bearish at the moment from a trend point of view. The daily everything is bearish here at the moment. So I don't know what the odds are, but if you have enough reward to risk, it could. Oh, sorry, the odds was sorry. Okay. It's funny that these numbers are the same there. Yeah, makes sense. Only thing is I would probably 84, 88. Maybe I would probably go just a tad lower with my stop loss personally. I would rather go to 84.77 in my view, but any candlestick patterns that you find interesting by any chance? We could take a look at that. That are maybe worth reviewing. You can see how Harami, this was Thursday last week, but Harami here at the moving averages sometimes are good signals. For those trading the Asian session, maybe the doji here. I didn't trade this one, but the doji at the moving averages. Yesterday's shooting star are examples. Three to tops on the 5-minute chart. Well, it's a bit short term, but we had hourly candles yesterday in the Yazi, the shooting star. Oh, sorry, that was Tuesday. Shooting star was Tuesday. No, was yesterday. Asian session. Sorry, Harami here. Shooting star again. Yes. No, earlier today. Those are examples. You know, the same candlesticks in consolidations like, for instance, on the pound yen are less desirable. Although a shooting star here did not do that bad here, it's still more of a consolidation. Alrighty, so let's move over to Fibs. I don't see anything now, but basically price action, candlestick patterns at pivot points and moving averages, always useful. Let's take a look at Fibs. I have to switch the template again because this is full of moving averages. Already. So from a Fib point of view, let's take a look. Let's start with the very first downside, all right? We're going to Fib until basically the target gets hit, which is the minus 618, and then we'll take the new retracement to new target. That's a very standardized method of Fib trading. So we can see here, we really didn't get any retracement here at this point, but it is the first pause where price fell, okay? Here with the first pause with first retracement. Didn't really retrace anywhere, but it is the first move down, pause, follow through. When did we hit the target? Right here. So then we could put a second Fib from the retracement level to the minus 618 target, or to the moment the price stops after hitting the minus 618 target. We can take the first one off again, and let's take a look what we have. Basically, price went to the 50 Fib. Basically, price went to the 38.2, hit the minus 272, then retraced to the 50 Fib, then made a double bottom, then went up to the 61.8 point Fib, and then finally hit the minus 618 target. So this type of formation you see sometimes off of the minus 272 target. When you hit a shallow Fib, price goes to the minus 272, then retraces deeper, and takes out, in the meantime, the 50 and the 61.8, right? First the 38.2, then the 50, and then the 61.8. Right here, and right here. So despite the fact that price hit this first target, and despite of all of this consolidation, if you use this rule, you wouldn't have moved the Fib. The advantage of that is that you don't get caught in a loss, because if you would have seen this, let's say this swing high, swing low, you could start fibbing this, maybe this part. Well, if you put the stop loss above, you just had a loss there. If you start putting a Fib from this swing high to this swing low, even though price didn't break this bottom, you just had a loss because price went above that top. So by doing this, you're a bit more conservative, and you don't move the stop loss until really the minus 618 gets hit. So just because we hit here the minus 272 target, still the same Fib, and this consolidation lasts longer and hits these previous, or the current Fib. When can we move it? When we hit the minus 618 target. So that is here. So we take again the retracement, which is from here to the minus 618 target, which is there. Then we take off the first Fib. And we're looking for a Fib. Well, we didn't get there. Price didn't get high, and it just continued with this downtrend. So when you use Fib, sometimes, ironically enough, breakouts are also needed because price just didn't go up after it hit the minus 618 target. It just went sideways and then continued lower. So that's why breakouts are sometimes useful too. we can still use this euro-dollar fib, in fact, at the moment. On the hourly, things could look different. On the hourly, things could look different. We could see, for instance, if we start fibbing from this point, we fib the first move down up to the 78.6 fib. We first had a 38.2, then priced up to the 61.8, then at the 78.6. Price then fell to the target and hit the target later on. So we take the top to the fib target here, and we can take the first one off. Here too, no real fib retracement, only the 23.6. Then we hit the minus 618, so we can again, this is more breakout territory, so we again fib from retracement to target. Missed the 38.2 by a couple of pips, not much, 6 pips, and we're close to hitting the target. If we do hit the target, then we can take another fib again from here to the new target. This will be the new fib. But sometimes we can see that if you do the standardized, very standard way of fibbing, it's more mechanical, which is good because there are a set of rules. So you can't really let's say fib the wrong swing high, swing low. But sometimes it's less likely maybe that the move price will go to the fib. If you use the AO as a guideline for your fib, then you would be waiting for price to go back from and to the zero line. This was one swing high, swing low on the AO. This would be one swing high, swing low on the AO. This would be one swing high, swing low on the AO. This would be one swing high, swing low on the AO. So from the AO perspective, instead of from the fib target perspective, we had an exact 38.2 fib bounce yesterday, and we hit the minus 272 target. I guess there are other ways of fibbing. Obviously, different fib levels, different ways of fibs, placing the fibs as well. There are different variations. This is the two I use. So this is how you could use the fibs with AO. One thing though is that especially if you start out with a new direction, you will probably get more deeper fibs. The further in a trend, the more shallower fibs you might get. It also depends exactly what leg you fib. If you're diving into a lower time frame and you start fibbing this last part, you are vulnerable to this bigger retracement here. Any questions maybe? So this is this takes just time to go on the time frames and pairs you like to do. Maybe one more example on the pound dollar. Now, obviously, there is a point where you'll be fibbing maybe to both sides because this upside fib is not taken out yet. This bottom was not taken out yet, right? Let's say. Let me take a look at exactly where that fib was. That could take a lot of work before that happens, but let's start quickly from here. So if you take the fib from target to, if you take the fib from target to retracement to target, then we had an 886 bounce here, and we kind of broke through that fib level here. Although the consolidation continued. So actually probably this fib, right, is the one to look at. Right? We stopped at the 61.8, we stopped at 38.2, we stopped at 78.6, and then we crashed through it. So those were one of the reasons, one of the points that were very important for me also to realize that this is not as bullish anymore as we want to see it. We still bounced off the 170.40 twice, but I didn't think that was that crucial because we broke through the fib there. Well, one of the reasons why I expected more downside. So if we then break through this bottom, we for sure, of course, can start fibbing the other way. We could do that already prior to that, but that's still counter trend fibs. So now we start fibbing all the way down. We can take this up fib off. $50 fib here. And you see most of the time the fib high here doesn't get taken out. You see that? This is the third time, 78.6 fib. At the beginning you get deeper fibs, the 50 and the 78.6, and I think here was not that deep, but it's anyhow, no one would be really looking for bearishness that much here anyhow. Unless you're reversal trading. And now the fibs start to become a bit more shallower, as we can see, 23.6. And then the breakouts start to become useful because otherwise you don't get the retracement. You know, it's not easy. You can't take a 23.6. You're just too much exposed. This fib stays valid until we hit this level. So the last strategy is the Tenkin strategy. That is a very mechanical strategy. Now I forgot where I have it. Doesn't matter. Let me show you here. It uses part of the Ichimoku, the Kiyun and the Tenkin to be precise. It uses two parabolics, the 2 and the 5. You can use fractals in the L. I use it just as you know, I use it on every template, so, but it's not really that important for here. The Swiss yen, no, it doesn't. Well, it had some examples. Let's see. Here. Right? Let's take a look at that example. That was from mid-July. Tenkin below the Kiyun, that's the trend. The Tenkin at a downside angle. And then price is pushing through a parabolic, yes. And the candle closes near the low, yes. That's a typical breakout on the Tenkin. Right there. The stop loss would be above the tops. So it's about a 70 pip stop loss there. And the first exit would be if, well, the first exit could be the parabolic right here, unfortunately. If you wait for a bit more patience before the Tenkin recrosses the Kiyun and price above the Tenkin, the exit would be all the way here, not so long ago. So this is a trade example that concluded on Tuesday on this Tenkin, but started on the 15th. and it closed for about just a tad less than 1-to-1. This trade was up, though. If you are looking to take some TP along the way and close part of the profit with a hard TP, one could, for instance, use a ratio like 1.5 to 1, which I'm not sure if it got hit here. Just barely got hit, indeed, a 1.5 to 1. Or use a fib. And you can see that the minus 618 target and the minus 1000 target got hit. Currently, at the moment, though, just from a discretionary point of view, we're in this triangle. So it's interesting, of course, to see which way price will go. Does it break here to the downside, or will we price move back to the top of the triangle and find resistance there? You know, we can stay in that triangle. Anyhow, that's a different matter. But that's how the Tenkin strategy would look like. The Tenkin above or below the Kiyun is the trend. Above it is uptrend. Below it is downtrend. Tenkin at the same angle as the trend. And then price breaking through one of the two parabolics with a strong candle. That's what it all boils down to. So it's very mechanical. So there's not much to discuss here. It's just a review of that strategy. And an example of the Swiss yen that closed this week. Well, folks, that was a look how you can tackle the currency with a couple of tools here that we showed today. Do you have any questions? Be careful and cautious with today and Friday, and probably the remainder of the week, because tomorrow is also the last day of the month. So today, Thursday, Friday are not easy days. Good days to maybe take a few days off, for instance. Not too bad, maybe. But tonight, Ned will talk a bit more about what to do in the summer. And tomorrow we're actually taking a look at August as well. So tonight, Ned has again a webinar. Tomorrow, same time, same place here as well with the moving average. No, what are we taking a look at? Tomorrow, sorry, price action and pivot points. Then we have August is a bit slower because there'll only be a couple of live trading labs, 5th, 6th, and 7th. And then there's 1 week nothing. But then we'll be back again the 19th. So there's between 7th and 19th no webinar. But from 19th forward, we will have the same schedule again. No questions? Dollar is really pushing at the moment, as you can see. Getting close to the top of this uptrend channel. So I'm very curious if this is going to be a major breakout. Time will tell. But with Without any questions, I guess we will wrap it up for today. Just take a quick look what is happening with the euro, pound, and dollar. Pound dollar is moving down a bit, but is bouncing probably off the H3 indeed. The euro dollar is also trying to break through the 134 as we speak. It's pushing through it. Odd USD. Traced actually even a bit deeper, 93.77. 61.8 Fib. Certainly having some struggle with that downside. I would probably, I will probably move the stop loss here because to above this top, because I don't want to get stuck in some awkward zigzag formation here. It's kind of like losing a bit of momentum, I would say. I mean, unless it continues now, but if it moves up again, it would be not so desirable. Let's see, any correlation between dollar and Swiss. That's one of the advantages. If you take it a bit higher here, then you almost have no risk. If you take it exactly at the 61.8, now you can really move it right above this top, and it's just a couple of pips risk, nothing almost. Took it a bit lower, but still. Any correlation between dollar and Swiss franc? Dollar Swissy is, in the sense that, well, the dollar they both have a bit of sometimes a safe haven perspective, right? Just like the yen. Although the dollar Swissy fell a lot in 2010 and 2011 after kind of a triangle. For those that were trading at the time, we saw this kind of triangle here, contracting triangle, and then a big 4,500 pip break. And like an elastic band, saw a snapback of 3,000, and then have gone quiet for the last 2 years. Prior to this triangle, we had a downtrend on the dollar ever since 2000. Here, which was a very big trend with its pauses, obviously, but overall, big downtrend. Fell all the way from 183 to about parity. So yeah, I mean, both have that safe haven perspective, but still, the dollar Swissy moved a lot downwards specifically. So. You'll see this pair. You see this on most pairs that at around 2000, the dollar was the strongest, and was weakening ever since then. At this time, the U.S. had more of a balanced budget as well. After that, it started to incur more debt. But the Swiss franc, I would say, I still think it's ready for more weakness in an attempt to weaken the franc. The spike up here, I mean, how many times do we not see, consolidation and follow through like that? So to me, 107 still remains the target and vision. If you look at this first spike up, down almost to the 38.2 fib, then to the minus 272 target, and the 61.8 fib retracement, confluence right there, plus the parity level, obviously, right? Big resistance. in a first zigzag in a way. Then we get kind of a three-wave correction. 1, 2, 3, with the falling wedge as the third. And now we broke out of that falling wedge, and price is gaining higher highs and higher lows. It's too early to tell, but this zone up to 107 seems like a very interesting potential on the dollar Swissy, up to the confluence of minus 618 and the 78.6 fib. This is, of course, how you can use fibs as well, more in a discretionary point of view, just for analysis sakes. And price would then make kind of like an expanded double zigzag correction or something like that, up to 107, which really, from a historical point of view, in the grand scheme of things, which seems like a lot at the moment, 107 is really nothing. Well, it's still a lot, of course, higher than 0.7. Yes, that's true. But we have to realize that price was really below parity quite, never actually, since 1990s at least. This was really like an exception. And it was really only quick, a few weeks did it really stay below, let's say, the 86 mark, right? It was very, very brief. And for those that remember this upside, it happened in minutes. It's crazy, especially this one here from 78 to 85. It was a big blast. So it was really quite short anyhow. So 107 anyhow, back to the long-term scope of things. 107, this red line, you can see, well, it's on the lower side of the average, historical average, right? You got a 144 EMA coming here. Doesn't seem too much to ask, but let's see. All right, folks, thank you so much for joining us today. We'll be back tonight and tomorrow. Hope to see you then, and have a good day. Cheers.